We are back with some breaking economic data.
Yeah, in May, inflation rose by 2.4% year over year and 0.1% month over month. That is roughly in line with expectations. Here to talk more about the report, our economic dream team, NBC News business and data correspondent Brian Cheung and Investopedia's editor-in-chief Caleb Silver. Good morning to both of you. Brian, let's start with you at the big board there. Just walk us through these numbers and how they do compare with previous months.
Yeah, as you mentioned, these numbers weren't anything particularly crazy. But again, just to put that 2.4% number in context, what we're talking about here is prices rising by 2.4% between May of this year and May of last year. And that year-over-year data point is a bit of a tick up from what we saw in the last month of April at 2.3%. But you can see that all things considered, that is still a vast improvement from some of the 3% figures we had seen in the months prior. If you unpack some of the broad categories here that led to these numbers, these are now monthly changes that we're looking at. How much did prices increase between April and May? After some deflation in the month of April, we did see prices increase a little bit by 0.3% in May. Energy costs did go up by, went up by 0.4%, which is a slower pace than the prior month, but again, still going up. And then shelter costs, the biggest cost for most Americans, that's still increasing by 0.3%. But again, none of these figures are particularly telling on the tariffs front, but still notable as we continue to watch for the impact in the months to come.
Caleb, let's bring you in. Your reaction here, and do you think that tariffs had any impact?
Not yet. It doesn't look like it's had any effect, but you got to look at gas prices. Brian mentioned energy. That's utility prices that drove that a little bit higher, but gasoline prices are down 12% year over year. Gas prices really dictate a lot of spending for U.S. consumers, because if we're paying a lot to fill up our tank, well, that's a pretty big deal, and we're spending less on other goods and services. But those fell 12% now on an annual basis. That's freeing up money for other things. We have not seen tariffs bleed their way into prices so far. This was probably taken in the first part of May. We'll see if there's any impact in the second part, and there's new tariff news almost every single day now.
Right. So, Brian, if you do break this down by category, I know you already showed us food, energy, shelter, but does anything stand out? What do we see there when we look at some of these specific items?
Yeah, well, I mean, rates of price increases might not be as translatable to people. So when we talk about some of the things you buy on a daily basis, here are the average prices according to this data. Egg prices, this is one that has definitely gone up, although on a monthly basis, it has come down. $2.70 a year ago, now $4.55 is the average nationwide. Milk costs have also gone up a little bit to $4.02 a gallon. Gasoline, as Caleb was just mentioning, is down. That is the one silver lining in this report. It was $3.76 unleaded on average last year. It's $3.31 now. And again, I want to point out that when we talk about the tariffs, these are not categories that will be as directly impacted by tariffs. They're not necessarily goods that come in, for example, from China. These were the categories that I was watching coming into this report. Appliances and toys, we did see some impact. Prices actually rising by 0.8% in the month of May. Again, some of that could have been the residual of some of those Chinese tariffs. Toys, 1.3% in a single month. That is notable. Although new vehicles and apparel, which would also likely have been impacted, we did see some price decreases, down 0.3% for new vehicles and then down 0.4% for apparel. So we're not quite seeing the impact in those categories, but of course we'll continue to break apart this report, which only broke a few minutes ago, guys.
Yes, thank you both for getting through it quickly for us. Caleb, usually we're just asking about the data that we get from these reports. But today I have a question about the report itself. I mean, the Labor Department has said it might not be able to continue to collect this type of information because of cuts to its department, the work done by DOJ. Is that concerning?
That's starting to concern some economists and people that watch these numbers, because we need this data to track the progress of the U.S. economy. So if it's not clean or we're not getting it on a timely basis, that could be a concern. We had that jobs report last week on Friday. Jobs report seemed fine, but there were massive revisions to the prior months, which tells you that, are we not counting correctly? Who's counting? Is it because of short staffing, maybe at the Bureau of Labor Statistics, that we're not getting this on time or as we need it? So that is something we're watching pretty closely. But if you just look at the headline numbers look really good. Inflation is right where the Fed wants it to be. But if you hear from companies like Walmart and others, they're raising prices. So we got to find that disconnect between what companies are telling us and what we're hearing from these government reports.
So, Brian, just from the perspective of everyday Americans, what's this inflation report mean for us and for our wallets?
Yeah, well, I mean, I think when you talk about even the categories that we're watching here, right, appliances, toys, these are things that might become bigger expenditures, especially as we get a little bit closer to the holidays. And this is important because right now is when a lot of these companies that are trying to stock their shelves for the holidays are trying to put in orders. So if we see price increases right now, that could point to things being more expensive come the holiday times, as we also hear here of the continuing volatility in the tariffs headlines. A lot of companies and especially shoppers, we have no idea what the tariff rates are going to be on any given day, let alone any given hour. So for that reason, that's a lot adding to the uncertainty here, and also a big reason why we've seen consumer confidence wavering, a bit shaky at times. This is all part of the uncertainty that is weighing on Americans during this time. It's really more important than ever to make sure that you're saving, not spending on anything that you don't need, and make sure that you're not going into debt because those interest rates are still high.
Caleb, countdown clock.
Yeah,
Countdown
7 days,
clock.
5 hours, and 19 minutes, but don't wait for much because there's a 0.2% chance the Fed lowers interest rates next week. I would be highly surprised. There's a 100% chance the president will be very upset when they don't lower interest rates.
Wow, I've never heard you say something so short.
Caleb, Brian, thank you both.
Thank
Appreciate
you.
it. We got some more.
We thank you for watching, and remember, stay updated on breaking news and top stories on the NBC News app or watch live on our YouTube channel.